On Thursday, NVIDIA, NASDAQ, NVDA reached a high of 140.76 per share. By Friday, the stock had fallen as low as 124.30 a share. Believe it or not, that dip reduced NVIDIA's market value by about $4 or $5 billion in less than 10 hours of trade. Discover what sparked NVIDIA's $400 billion sell-off and whether it means long-term concern for stockholders. Below are some highlights from the conversation between 24/7 Wall Street analysts Austin Smith and Eric Bleeker. NVIDIA shares fell sharply after reaching more than $140 a share on Thursday morning. The company's market value fell by $277 billion between its peak on Thursday and its closing bell. That exceeds the entire value of stocks such as Qualcomm, Salesforce, Adobe, Pepsi, T-Mobile, Wells Fargo in a matter of hours. And the selling on Friday morning increased the market value loss to $400 billion. So, what triggered this rapid reversal? First and foremost, we must accept that enthusiasm for AI as a trend has been extremely high. NVIDIA was trading at $94.94 before its earnings announcement on May 22nd. At its high on Thursday, it had increased by little under 50% in a month. That is simply an unprecedented run for a firm of this scale. And there were indicators that the craze in its stock had reached absurd proportions. Even though markets were closed on Wednesday, NVIDIA's stock rose 4% in foreign trade. Fortunately, none of those numbers are errors. Is this a signal for NVIDIA investors to sell? We do not think so. Stock market bumps are good, and NVIDIA's biggest risk, a drop in AI hardware spend, appears no more plausible in the next 18 months than it did a week ago. We've published many pieces on 24/7 Wall Street that provide numerical reasoning for why NVIDIA will most certainly reach $150 by the end of summer. If the business maintains a steady forward PE multiple with its magnificent 7 peers, NVIDIA can still achieve that level. Finally, if the sell-off persists, we recommend keeping some of the more high-quality AI names on your radar. These might include firms such as Broadcom, NASDAQ, AVGO, which competes with NVIDIA in AI networking and processing. There are also infrastructure options that you may have missed before they run that will gain from AI growth, such as ASML, NASDAQ, ASML, or Lam Research, NASDAQ, LCRX. Regardless, we don't believe NVIDIA's sell-off is due to any news. It is just the opposite side of the momentum investors have observed over the last month.